And we are live. Hey, family, welcome to another episode of JMMB Goal Getter Live. What's happening, everybody? Welcome to another great episode. I see my comments lighting up already, and I got my real MVP, Richardo, in the house. How you doing, Richardo? Good to see you. Oh, see you. As always, we appreciate your joining. I know we have my regular peeps and I have my new peeps and my not so new peeps, second timers, third timers. We're happy to see everybody here tonight. Well, it's night now. We're doing this live and it's Tuesday night here in Kingston, Jamaica, which is where I'm coming from. But I know we normally have an international contingent of viewers, both here in Jamaica and abroad. So you know how we would like to do it, guys. Drop a comment, whether you're watching us from Facebook or YouTube or Twitter. Drop a comment. Tell us where you're watching us from and say hi. I see my people coming in as usual. Hey, Orville. Good evening. Yes, good evening, family. Hey, Shanique. What's happening? You change your picture, your profile picture. Tashana, what's happening? You missed last week. You know, you can catch the recording, but we're happy you're here tonight. Welcome. Hey, Sophie, nice to see you. Narisha, love it. Watching from Trinidad under some serious lockdown, man. Wow, hope you guys are faring well down there. I can imagine it must not be very easy, but thank you so much for joining. Omar from Canada. Patrice. What's happening, Patrice? Hey, Tori from Kingston. Yes, new look, Shanique. Yes, guys, drop a comment. Tell us where you're watching us from. We're here to have another great conversation. As always, you know how we like to do it with JMB Goal Getter Live. We are here to just break it all the way down and keep it all the way real. We're giving you the information that you need to plan and organize your financial life, right? Because that's what it's all about. We know that ain't nothing going on but the rent and maybe the mortgage. You know, we all have our financial goals we're trying to reach. Yes, we're still navigating a COVID-19 pandemic. Some countries are further along the journey than we are based on how quickly their population is being vaccinated. But at the end of the day, guys, JMMB is still very much here to have the conversations you need to be a part of so that we can get to where we need to go. And we're going to start a very interesting topic tonight, guys. Insurance. So if you've been watching us over the past few weeks, the word insurance has come up a few times, right? Quite a few times for many different reasons. And of course, we couldn't ignore it because at the end of the day, you're the reason why we do these lives, we do these sessions to give you the information that you need. And if insurance is a big point of information that people need to tap into, then we're going to deliver it. So we're going to start the conversation tonight. And as I was saying with our special guest here, we were backstage kind of just preparing and chatting it through. I'm like, you know, this insurance conversation could actually span 2 or 3 episodes, right? But tonight we're going to start the conversation because we got to start somewhere. We're going to start talking about how insurance can boost your financial plan. And we're going to start primarily focusing on general insurance tonight because there's general and we're going to find out what that is. There's life insurance, there's health insurance. I know we have some entrepreneurs and self-employed folks, small businesses in the house who are concerned about insurance in one way, shape, or form. But guess what, guys? We're starting the conversation tonight, and I know we'll continue it in the very near future to make sure we touch all aspects of it. So this is where we're going to start out tonight. Yes, CM, you're there early. I tell you, my people are the best. Hey, Nigel, good evening. Nice to have you. Andre, Ingrid, what's happening? Marvin, Rajwin. Oh, my goodness. I love it. Yes, guys, drop a comment. And you know how we like to do it. Call, text, WhatsApp, DM somebody, anybody who you think would find this information useful because we're going to have a great conversation tonight with our very special guest who I'm going to ask Jess to bring up on the screen right now. Chaluk Richards. Hey, Chaluk, how you doing?
Hey, Carrie, I'm good. Glad to be here on the Goal Getter series.
Of course. We're glad to have you. And I'm going to tell everybody how Chaluk is connected to JMMB, or certainly the organization he's with is connected to JMMB. But let's get a few housekeeping matters out of the way. So the first thing is, Chaluk, what does your name mean? Because it's very unusual. You're the first person I'm meeting with that name. So I'd love to know, what does your name mean?
Yes, so I get that a lot, and I get a lot of different pronunciations as well. So my name is actually based in Hebrew from Shalom. So it actually means inner peace. So that's why I am so peaceful.
Oh wow. Well, I actually I'll agree with that. For the few times we've interacted, you really live up to your name. So your parents did a good job of choosing that for you. I always believe there's power in how we name our children. That's just my personal belief. That names have power, and how that is declared. I'm not even gonna go there, but thank you. Welcome. Tell us what you do, Shaluk. Did
Okay,
I
so
pronounce it correctly, by the way? Did I get it
perfect.
right?
No, perfect.
Wonderful. Okay. Because I didn't ask that before.
Yes, you got to the front of the class, so that was good. Right now, I am the general manager at GK Insurance. We are a general insurance company based in Jamaica. We do everything except life and health, right? So that's your property, motor, engineering, etc. So we do all of that, and so that's the business that we are in, and that's the service that we provide, and so. I'm here to kind of discuss that with you and the viewers on the Goal Getter Live this evening.
Wonderful. And we're happy to have you. And GK stands for
Grace Kennedy, right?
Grace Kennedy. Yeah. And I mean, ever if you're a Jamaican, or you know of Jamaica, or you know a Jamaican and you don't know the Grace Kennedy brand, you're probably living under some kind of rock, because let me tell you, Grace Kennedy is a household name in Jamaica. And very, very proudly so. And we're very happy to have you. So, now just to bring everybody up to speed, right? So, if you didn't get the memo, because we've been saying it for the last few episodes, and we've said it a few times, JMB has an insurance brokerage company. We do. So we do provide insurance brokerage services to all of our amazing clients, right? So when we talk about, we offer integrated financial services. We not only do banking and investments, but we also have insurance brokerage services as well. And GK is one of the underwriting companies, the insurance providers that we broker products for, right? Is that so, Shaluk?
Right, right. Yes, yes. We have a very special relationship with the JMB insurance brokers. So definitely one of the partners that we work well with. And
Absolutely. And I know they love you guys too. I hear Sharon and her team talk about you all the time. So we have a great relationship with you guys. And again, this insurance conversation is gonna be multifaceted. We know we're gonna continue it, but certainly in kicking it off, we thought this would be a great opportunity to bring you guys on, or bring you on to represent your company, to start the conversation about how insurance can boost your financial plan. Because I know over the last few weeks in the discussions we've been having, Shalou, just to kind of bring you in, we have been talking about many different things. We've been talking about stocks, unit trusts, even cryptocurrency at one point. And, as I said, insurance keeps coming in as a question every now and again. And people have different views on insurance. We take that point. But again, as a complete financial services provider, JMB, we believe in the full financial spectrum of solutions that you need to be able to get where you need to go financially. And for us, financial protection is very important. And in our group, financial protection means insurance, and that's the role that our brokerage plays. And so here we are having this conversation with you here tonight. So we're gonna, you know how we do it, guys. It's your live. The format is, we're going to spend about the first 20 to 30 minutes just with some level setting questions that we would have shared with Chaluk beforehand, which we kind of feel are the more popular questions that people would have about insurance, just to level set and get us warmed up. And then we open up the floor as usual to you guys in the comments to ask your questions, right? So please drop a question that you have about insurance, specifically general insurance. That's where we're kind of focusing tonight, guys. And we will share them with Chaluk, and we will get them answered and go through this conversation. Because again, how many of us have the opportunity to speak to an insurance expert, on an everyday basis? So as always, JMB, we're bringing the information to you, educational, informative, and again, just helping you to do what you need to do to navigate the financial waters of your life. So Before we get into the first question, I got to big up again my people in the comments. I see people coming in. Remember, tag and call in your folks to come in. Hey Michelle, how you doing? Raquel, nice to see you. Nice to see you. Diana, yes, Diana says she loves the name Chaluk. She loves the name. Yes, I do too. It's very unusual. I love unusual names. It's great. Hey Hillary, hey Donny, what's happening? What's up, Jams? Everything good? Everything good? Andre, love it. Marvin, love it. Thanks, guys. So we're gonna get started. So, Chaluk, question number one. The people want to know, what is insurance exactly? Let's just break it down in very simple terms. We hear it being battered about and we think we kind of know what it is. But in simple terms, Chaluk, what is insurance really?
Thanks, Kerry. As long as you can think there was insurance. Insurance is actually one of the oldest career there is, or the oldest field there is. Now, insurance simply is a tool that you use to protect your assets. If you have asset or possible liability, then there is insurance to protect that asset or protect that liability. Right? So insurance really is used to transfer the risk that if there is some unfortunate event, maybe it's a catastrophe, maybe it is fire, maybe it is a car, you have a car accident, the insurance is there to ensure that you essentially do not have to start over from scratch. And so I believe that that's one of the critical things that people need to appreciate about insurance, right? Insurance, we all work very hard to accomplish all that we have and to acquire and amass our wealth and our assets, etc. And insurance really and truly prevent you from having to start over from scratch because you had an accident with the car and now you need to buy a new car and you have to dig back in your pocket to get all of that. So insurance really prevents you from having to start over. So it's that safety net, that protection that protects your assets.
I love that. I love the fact that you say it's really like transferring the risk, right, of loss. Because as you say, you work very hard to acquire something like a car, like your home, and something happens. As you said, there could be a fire, a flood, an accident, as it were, and you don't necessarily have the money to replace that asset right away. What insurance puts you in a position to be able to do is to perhaps help to, or in some cases, fully replace that asset in the event of damage or complete loss, or fix it, as it were. And I think that's a great context. So I think we're kind of getting into it because we started to talk about different things that insurance can protect. So what are the different types of insurance that exist, Chaluk?
Wow. There is a whole lot of different types of insurance, right? So once you think about the fact that there is an asset, then you have some insurance that you can cover it. So we started with the popular ones. You have your car insurance, you have your property insurance. On the property side, a lot of times people focus on just the building, right? But there's also content insurance. And so if you're renting and you do not own the building, you actually can insure your contents. Because I always say to people, just take out your pen and paper and calculate how much money is for all of the contents that is in your house, right? Chances are, if there's a fire, you can't just dip in your pocket and buy back everything one time. And so there's content insurance. There are various types of insurance that businesses use. So we know that especially during COVID, you have a lot of people, a lot of small businesses starting, and the economy does have a lot of small businesses in general. So you do have a lot of business insurance. A number of companies offer package insurance for businesses because, you may, especially the small businesses, you may want to have some goods in transit, which is really protecting the goods while it's moving from point A to point B. You don't want to have a situation where, something unfortunate happens and you lose your goods, and so you lose all of the money that you invested in there. You also have the liability for persons coming into your place. So you have a place of business and somebody comes in and slip and fall, right? Then you have a liability to them because they may have injured themselves. Then you have public liability that will protect that. If you also have liability to your insurance, your employees as well. So there's employers liability. There is marine insurance. There's travel insurance. So know that, you may end up wanting to go abroad and UK shut down, right? And so all of a sudden you can't go to UK anymore. But you bought your ticket already, right? And so you have travel insurance that would be able to assist you in some of those regards as well. So we also have a lot of new type of insurance coming in. So like you have micro insurance. So you have your cell phone. I mean, think about the cost of your cell phone now, right? A lot of persons, I mean, if your cell phone is lost or stolen, it is a deep money that you kind of have to dig in your pocket to get and to buy a new cell phone, right? And so what you have is you have micro insurance where you can now insure your cell phone or insure your tablets, so as to ensure that you do not, as we said before, having to start from scratch. So we have all of those, and I'm sure we can list quite a few others of the types of insurance as well.
Right. And you are largely speaking about general types of general insurance, right? Because as I said, yeah, we are focusing on general tonight. We know there's health and life, and that's a whole lot of conversation, guys. And we're going to have separate episodes for that for sure. But I really love this enlightening bit because when you think general, people just kind of think house and car. As you said, not a lot of people remember that there is content insurance. And I mean, now that you're saying it, I remember having experiences with friends and family. As you say, you don't have to own the place where you live. You have your jewelry and your expensive things, expensive appliances in the house. Somebody come and thief and rob. And then now it's insurance that helps you to replace a lot of those things. And I've had loved ones who've had that experience before. Now that you're saying it, and as you said, travel insurance. You're going to these places, you get caught in a jam, that sort of thing. There's insurance to indemnify you, and then, as you said, micro insurance. I didn't know I could insure my cell phone. I did not know that. Oh my goodness. Wow. So this is great information. And guys, I just love to see all the people coming in. Hey Lily, hey Andrea, what's happening? Hey Odian, late but still great. Happy to see you. So that's great context, Chaluk, because it really helps us to recognize that there's so many ways that we can protect the various assets that we have, however small, from damage or loss by insuring them. I think that's great. I guess we kind of covered it, but I think we'd probably need to kind of sit with this next question a little bit. Why we need insurance. And I believe it's important for us to sit with this next question because I've heard a lot of people say, you know what, I'm going to self-insure. Meaning, no worry about it, man. I can replace it. It's all good. I have some savings in the back that I can pull on. I have some investments I can liquidate in case of anything. I'm going to self-insure. And I won't bother with this insurance thing. Why do we need insurance? I know we've defined what insurance is and about transferring risk and protection, but I mean, for those people who are like, look, I want to self-insure, what's the case that you would make why someone would need insurance as part of their financial plan?
Right. So I would say that would need insurance primarily because you want to protect all that you've amassed, right? So let us use an example. Say, for example, you are driving a car, right? And unfortunately, you meet in an accident with somebody else and you're at fault. You're normally a good driver, so this is just a bad day, right? And you're at fault. But the persons in that car is injured. They're injured. And maybe it may cost you $10-15 million so as to deal with the nature of the injury that these persons have. Now, you may have initially calculated and said to yourself, I have my $2 million car, my $3 million car, and I'm able to repair it, right? But you did not factor in, like, okay, what if I have liability to somebody that is beyond the amount that I'm able to, right? So most persons don't necessarily just have $10 million, $5 million sitting down in their account just like that. And so what that means is that if you do not have insurance to protect you against that liability, then you essentially will have to face the courts where these persons will be seeking damages against you, right? And so it is very important to give you that peace of mind that says, look, if anything happens, then I'm able to deal with it. I know that we're not dealing with like life and health in general, but that's the same way like why persons buy critical illness. Because if it is that you have to deal with a major illness, right? And we know that sometimes these can be very expensive endeavors. You do not want to wipe out all your savings just so as to meet these expectations or the expenses that are associated. So
Mm-hmm.
insurance really and truly allows you to protect what you've developed so far, so that you're able to bounce back from these unforeseen circumstances quickly, and bounce back without eroding all of the work that you've done to kind of get to the point where you are.
I think that's a great example that you shared, Shaluk, because as you say, it's not even just about getting yourself insured for your own stuff. In the case of things like a car accident, for instance, and someone else is involved and you're proven to be at fault, you're talking about, putting yourself open to possible legal action for redress and so on, and rightfully so. And just to feed into your second point, what you do when you self insure, if you're not going to go the path of insurance, a lot of the times is that it can derail what it is you have planned for yourself financially. So, again, if you say you're going to be self insuring, right? It's like, okay, something happens, I'm going to dip into my savings or my investments to indemnify myself or the person that would have been negatively impacted by my actions. Again, going back to the point, you're derailing what it is you had planned for those investments and those savings to do.
Right. And the fact of the matter is that the premium that you pay invariably is a small percentage of the total amount, right? I mean, if you take into consideration your home insurance, for argument's sake, your premium is generally anywhere between 0.5% to 0.75%, right? So not even 1%, right? Which means that it will take you over 100 years for you to pay the full value of that house, right? So really and truly, what you're buying and the protection that you're getting is definitely worth it than having to deplete all of that savings so as to get it. So it's really comparing the premium to what you'll have to pay out if you have that unforeseen circumstance.
I love that. I love that. And I think that's a great case to be made for why insurance is so necessary. So I'm going to ask Jess to bring up the next question. Jess is our admin in the back who is working behind the scenes. Hi Jess, thank you so much for your support. Now, if you could then explain for us, Shaluk, let's start to talk about the inner workings of insurance, because we start to drop some things like we spoke about the different types of insurance and so on. I just use the words like premium and transferring the risk.
Mhm.
And you just spoke about, well, instead of buying back the whole thing, all the money you'd have to pay to replace that thing that would have been lost or damaged, you really would have been just paying smaller incremental premiums up until that point. Anyway, could you kind of break down for us, how does insurance coverage work? How does that whole mechanics work? Because I don't know if a lot of us really understand that quite well.
Well, so I mean, essentially, as we said, we have the various types of insurance, and we can actually get into different examples, right? But generally speaking, insurance together is a pool, is a community, right? Where you're essentially pooling your premiums to cover the risk. Of the loss of the unfortunate few, right? So it's a premium of the many covering the losses of the few, right? In relation to car insurance, we cover liability, and it is very important for viewers to pay attention to your limit of liability, right? A lot of times we look on car insurance and we really just get what we need to go to tax office or to kind of show, the bank may say that you need comprehensive insurance and we don't pay attention to our limit of liability. But really and truly, we have to factor out and look and say, okay, what is our liability to a third party? So you buy an insurance premium, an insurance policy that has a $3 million liability, right? And we know the cars on the road, right? We see Porsches, we see X5, we see all of these very expensive cars that are $15-20 million. Now, what is your $3 million policy going to do for you if you end up in an accident with a $10 million car? Right? It simply means that you're now exposed, right? In addition to that, so we look at the liability. We also cover theft, property damage, fire, bodily injury. So if somebody is in the car and there's injury as a result of that accident, then your insurance will also help you to cover the medical expenses associated with that. And there are also some legal expenses that your insurance policy will cover, right? And so that's from a car insurance standpoint. On the property insurance side, generally speaking, the insurance policy will speak of acts of God, and that's really more say natural disasters. So you're talking about your hurricane, your earthquake, your cyclone, etc. Those are the things that will cover under your property insurance. But we also cover fire, right? And there's also flood as a result of burst pipe, which a lot of persons don't know. So you're in your house and the pipe bursts and it damages a couple of your equipment or your furniture, etc. You do have that coverage under your property insurance, right? And a lot of persons don't know that. A lot of property insurance policies also carry a liability insurance component. And so there are other bits and pieces. So you may have a liability because of persons coming on your property and getting injured. It could be as a result of a dog bite on your property. Right, you have some protection for that as well. So there are a lot of things that falls under your normal residential type of insurance, and we know that we also have the business insurance. We spoke about travel insurance, which really deals with flight cancellation, loss or damage to luggage, flight delays, etc. Those things are under your travel insurance. Business interruption. So for your business folks, you actually have business interruption, and business interruption is really loss of profit, which essentially means that you are buying insurance that if you have a fire to your property, so it's normally tied to a material damage. So I think and material damage means that there is actually some damage, some physical damage to the property, right? So there's fire or there's an earthquake, etc., that cause the business to stop, right? And as a result, you have loss of profit. There is actually insurance to cover that as well. And we spoke about the various type of insurance, like your small business that you can have, your money insurance. And so you have money that you're moving from your location to the bank. And, unfortunately, somebody hold you up in transit or hold the courier in transit. You have money insurance that covers that as well. And we spoke about goods in transit earlier. So there, as I said to you, Kerry, there are a whole lot. And these are just some of the more popular ones that we have on the general side.
Wow. I mean, is Una have insurance to cover everything? I mean, this is this is awesome. I mean, one quick question, because you mentioned, insurance to cover. Suppose somebody comes to your house and gets injured and stuff. There are a lot of us, and I guess everybody would have to assess their own risk, in terms of the likelihood of that happening, or whether I entertain a lot. And I just, out of curiosity, I entertain a lot. People come over all the time. I don't. I'm just saying hypothetically. I entertain a lot. People come over all the time. And I decide, hey, that's a great bit of insurance for me to take out. Or are things seasonal, or does everything have to be insured for a year? I mean, could I do something for like a few months? How does it work?
So you're actually venturing into a different type of insurance, because you also have event insurance. So you actually can have insurance for your event, and for just that. And we know that we're also speaking, hypothetically, this is outside of COVID and our social distancing and all of that, right? So
yeah.
This is not today, right? But we do have event insurance, so you can buy insurance for your event if you're having an event, a wedding, etc., in your home, and you want to ensure that you have the necessary protection. You can have event insurance as well.
Wow. Okay, so I don't need to take it out for the whole year. I can just do it for the event.
Right.
That's very good. That's very good to know. So there are so many different things that insurance in the general insurance space can cover. I mean, you're speaking about you spoke about contents earlier. You spoke about travel. You spoke about people getting injured at your home. My goodness, I just really can't keep up. Is there anything that y'all don't cover, or what are some of the red flags that you would be like, no, there'd be no insurance for that. There's no app for that. There's no insurance for that. I mean, what would those things be?
Well, I mean, a lot of that would be, maybe there's no insurance for that in Jamaica, right?
Huh?
But if you think about it, most things there is a market for it somewhere overseas, right? And so, as to the extreme where athletes can insure their feet, right? But there's no insurance for that in Jamaica, right? So in Jamaica, we would say more of those specialty type of insurance. Terrorism generally is excluded from most insurance policies in Jamaica, and so but you do have terrorism insurance. It's just that it is not available in Jamaica. So I would more say that it's what is not in Jamaica as against what is not possibly insured at all. Generally speaking, you cannot insure against criminal acts, right? And so ultimately, that is where you can say, well, there's no app for that. Like you can't have insurance to say, boy, you rob somebody, you lose the money on the way out, or something like that. I mean, there is no
Meaning you are the thief. You can't
you are the
insure.
thief. Right,
Oh,
right, right,
because I'm
right,
like, if I get
right.
robbed, though, I can insure
Yeah,
my stuff against theft.
definitely,
But
definitely.
as a thief, I can't
Right. The
insure the
perpetrator
thing that
cannot
a
get
thief. Yeah.
insurance. Right, right, right.
Thank you. I mean, I see a question here coming in from Jean Imani Dundas. Hey, Jean. Do you have offer property insurance coverage for like church buildings?
Yeah, man, most definitely, most definitely.
Yeah.
I
Yeah.
get a church building insurance just today, literally.
Okay.
So
Okay, great.
we do offer insurance for church building.
Okay, good to know. Good to know. So, just going back again to the inner workings there. So, you said, basically it's a bunch of us paying some premiums, right? That go into a pool. And as you said, the minority of people will actually end up having to pull on that to, replace or repair a loss of some kind.
Mhm.
Um, so I think that's a great segue into the next question, because the thing is, what we're paying is those premiums, right? And I think that is probably the big sticking point for a lot of people is this premium, and sometimes the premiums seem high
Mhm.
and expensive. I mean, what goes into determining how much premium I pay on something? I mean, what are the things that, I can consider, that I need to know that insurance companies are considering when they charge a premium? And then also, I think what's probably good to ask, is there anything I can do to affect how much premium I am ultimately charged? I think those are probably the burning questions that people have when we talk about insurance premiums and why people shy away from insurance for that reason.
Yeah, man. Excellent, excellent question, Kerry. The insurance, as we spoke about the fact that insurance is really a pool, right? And so, in the purest sense, your premium is based on the risk factors that you present to the pool, right? So generally speaking, what you do, you look on the various risk factors, and then we're able to calculate a premium based on the risk factors. So let's take into consideration your property insurance, right? A house with slab roof would possibly attract a lower premium than a house with shingle roof. Primarily because the house with slab roof there's no risk of hurricane blowing off the roof. There's no risk that there is fire nearby, that the particles kind of blow onto your roof, and then it catches fire, right? And so you do look on the type of roofing, you look at the type of occupancy, the type of construction. You also look at the proximity to the sea. A house that is on the seaside will definitely attract a higher premium than a house that is further inland, because we know once hurricane comes, you have storm surges and all of these things. And so these are some of the factors that we take into consideration when we're looking at the premium. And so essentially what you can do if you're considering buying a property, you can then establish like what are some of the things. As I said, generally speaking, slab roof will attract a lower premium because really and truly, a risk is more of an earthquake risk than a wind risk, right? And so you have those variables that you can consider. On the motor side, there are a whole lot more variables that we take into consideration. So you look on the vehicle itself, and therefore a high performance car may very well attract a higher premium than a standard car. So you have a car that is souped up, and it is 6-liter engine, etc., versus somebody with just a 1.8. It is a very different. That's your souped up car. car, right? You know, but so we look at the vehicle, we also look at the driver, right? So how experienced is the driver? What is the last history of the driver? So if you're somebody that has had like 2 claims in the last 2 years, you may attract a higher premium than somebody who has had no claims over the last 5 years. Also, if you're somebody that's been driving 10 years accident free, you'll also attract a different premium than if you just got your license, right? And so we look at the driver as well. We look at the driver's experience, and so those are some of the things that we factor in relation to the motor insurance. So normally there are various risk factors, and what you do is we kind of ascertain is does it carry a greater risk to the pool or less risk, and then that will determine the premium that is charged.
You see, I should have told you this, Chaluk. I'm very, very. See, Jessica has the thing to just pop up. Mic check. We can't hear you, because I'm very popular at turning off my mic and don't forgetting I turned it off and having big conversation by myself.
Okay, I thought it
So
was
right, yeah, you're like, what did I do wrong?
yes.
No, it's all me. Trust me. I should just kind of put that on my forehead. I love to mute microphones and not to switch it back on. So yeah, so I was just saying, Shaluk, that thanks for sharing that, because I think what that kind of calls to mind, and it's probably the stickier part of the conversation as we talk about the fact that because we're transferring the risk essentially to the insurance providers, what that means is that you're really looking at all the things that feed into that risk. And you mentioned some great examples, but could it be too that where I live, there's certain parts of town that you're not going to insure, or maybe the premium is going to be higher because my house is located in a nearer to a rougher neighborhood than up in the middle of nowhere where people are less likely. Does it go that deep in terms of the risk when you're calculating the premium?
So I mean, the only factor that will come in where that is concerned is really your proximity to the sea, right?
Okay.
So there is no big difference between Kingston 3 and Kingston 6 and Kingston 8, etc. But if it is that you live, say, for example, in Portland Cottage, right, where we know that whenever hurricane comes in, there are problems there, then you definitely will have a different risk premium than the person that live in inland.
Right. Okay. Point taken. And I mean, I see a question here from Orville as we're talking about risk, and it's a great question. And this is probably a question for the actuaries. I don't know if we can even begin to answer it, but he's asking, worth very worthy question about the types of metrics that are used to measure risk. I know this is probably more into the actuarial conversation. I don't know if you could broach maybe what those could be, Shaluk, or would
Well,
be.
I mean, it's really tied back to the point made earlier. So, like on the motor side, the major variables that we use are like loss experience, etc. The age of the driver, the experience of the driver, etc. Those are some of the major pointers or risk pointers that we use. On an overall portfolio level, it does get a lot more actuarial and a lot more complex. But really, and if you're talking about you walking in, then those are the variables that we use from a client to client basis.
Right. And you would have your actuaries would support in terms of those little calculations in the back end that when you plug in the information, it spits out what premium would be charged, because the questions that spoke to the risk levels and so on, they would have worked all of that out in the back, I'm sure. Another great question here from Antoinette. And guys, yes, continue to drop your questions in the comments, because I feel like, this conversation is really flowing nicely. So we need not necessarily all together wait, because if your question is pertinent to what it is we are asking now based on our pre-stated questions, why not? So Antoinette has a great question about, is there such a thing as pandemic insurance, Shaluk?
There is such a thing, and I mean it's coming in the market now. It's definitely not something that is very that is very popular present here. A couple of our overseas partners has kind of waved like, guys, we are looking at this. This is something that we're willing to offer. The challenge that you currently have is most of these types of insurance deal with something that is not yet the case. In other words, you can't buy COVID-19 insurance in the middle of COVID-19. It may be able to protect you from the next pandemic, but it won't necessarily protect you from this one. But generally speaking, there is such a thing, and you'll definitely be seeing more and more of that coming in the market. You'll also be seeing more of, you may have more riders, maybe more things that kind of protect, the effect of pandemic as well. So you'll be seeing a lot more of that as well.
Wow. I guess the thing is that we really don't want another pandemic anytime soon. So, in as much as we decide we're going to take out pandemic insurance, we hope to be paying those premiums for a very long time. We don't want to go through this again, boy. I had asked the previous question about premiums and, if they're expensive or is there anything I can do to positively impact how much premium I'm charged? Just by chance, Chaluk, is there anything that I can do differently? Changes that I can make to my property or the type of car that I buy? Just saying, because we want to be in control of our money.
So I mean, I would definitely suggest that that viewers, sometimes you need to have a conversation with your insurance company when you're in the process of buying a car. A lot of times we don't have that conversation. Invariably, actually, a lot of times we don't think of insurance until after we buy the car, right? But you do have, and different insurance operate differently. So, I mean, I can only speak from our standpoint, but you do have certain types of vehicle that will have more attractive discount than others. And that is generally based on the performance of that type of vehicle as that risk within the portfolio. Right. And so you may very well want to consider that to call the insurance company and say, okay, I'm thinking about buying a Toyota versus a Mitsubishi. Tell me, what am I supposed to do? And the insurance company can then guide you and say, well, in our neck of the woods, this is better than that because of XYZ. And every insurance company has a different portfolio, and therefore they will have a different kind of risk makeup. Right. And so I would not necessarily be able to say, this type of vehicle is better, but as a generally speaking, you want to have this. And then I'd also say you want to ensure that, so like, for example, if you have young children that are inexperienced that you have driving, that could definitely cause your insurance to go up. There are ways that you can manage that. You may very well decide that you want to work with the insurance company and say, you know what, my young child would only drive when I'm in the car, right? And so they'll be getting experience while I'm there, because chances are your 19-year-old will not drive the same way alone as they would with you. Right. And so a parent being there will definitely cause them to operate very differently. So there are some things that you definitely can put in place to help to manage those risks, and by extension, manage your insurance premiums as well.
I love that because I really like the fact that you say, it's good to have a conversation with your insurance provider. Mark Anthony actually asked a related question here. He's very specific, Mark Anthony, on a mission, man. I love it. What's the best time for someone with a new license, because we know you're not experienced, to look into insuring a soon-to-be newly purchased vehicle for the lowest premium possible? Mark, I tell you, you're on a mission, man. You're working it out to the letter. I love it. I mean, what are your thoughts on that, Chaluk, if we're keeping it real?
So generally speaking, my suggestion is that, Mark Anthony, so you may want to start from even before you get to this point. Right. And so you're driving on your parents' policy, you have yourself named on your parents' policy, because what that means is that the insurance company is building an experience of you. And so they know that there's Mark Anthony on his parents' policy, and he's been driving this car, even if it's only on the weekend, for however long, and we have not had any issues. So you're able to build up an experience. Right. And so when you're getting to this point, when you are now just about to buy your own car, you're able to kind of leverage that to be able to get a lower premium. Outside of that, I mean, there are other policies. I can only speak up from a GKI standpoint, Kerry, where we do have a family insurance product where if you share an address, you actually can benefit from the no claim discount, the highest no claim in the discount in the address, right? So if it is Mark Anthony and mommy and daddy live in the same address, then he'll be able to benefit from mommy's no claim discount, even though he was not necessarily the one that earned it. And the idea is that you're in the same family, live in the same place, so you generally have the same mindset and the same way of being, and so you should generally carry the same risk to the pool. And so that is also another component that Mark Anthony could consider.
I love that. See, guys, we love to keep it all the way real. I mean, I'm just learning some things, same address. Oh, that's awesome. I like that. And if he's maybe on his parents' policy, I love that. But I think the point is well taken too, that Mark Anthony really should have a conversation, because the type of vehicle that you buy, I'm sure, would attract different types of premium, as you rightly said, and having that conversation ahead of time to help you kind of figure out, well, how much can I afford in an insurance premium? That should go into the cost to maintain the car, to keep the car on the road. So before you invest or buy that car, as it were, it's good to have the conversation. I really appreciate that. There was a question here about, I mean, you spoke in the topic of no claim. Orville had a great question about, can I get so we know about no claim discounts for motor vehicle. Is this the same thing exists for like house and property? If I have my insurance for my house, how many years now, and I don't claim anything, give me a little discount of the premium, Chaluk, yeah or nay?
Yeah, so unfortunately, there is no claim for property. Actually, it's not in the market at all. And that's really and truly because of the design of the property insurance. So you think about it, Jamaica is small, and we're also in the midst of, I call it Hurricane Alley, right? Where you have a lot of hurricanes that pass through. So all insurance companies really buy additional protection overseas. And so a good percentage of your property insurance is actually ceded overseas to overseas reinsurers. And so essentially there is not sufficient space to say, okay, we're going to provide a no claim discount, because that premium is kind of going towards that reinsurance. So unfortunately, we don't have no claim for property insurance.
Yeah, and I guess you're no claiming for years, and it take one hurricane to wipe you out, both you and the insurance company, when it start paying them claims, man. It's a serious thing. Great question. Thanks, Orville. I want to jump back up. I don't want to lose it. Lily had mentioned micro insurance for their phone, and I mean, yeah, I didn't know that existed. Lily Strike Force. Does GKI offer that type of insurance, Chaluk?
Right. So GKI offer it, but we offer it via a partner. So you actually SMS, Smart Mobile Solutions. So we offer micro insurance of the Smart Protect. It's actually, the product is called Smart Protect. So you can cover both your phone as well as a tablet via SMS. And so they will also, a part of the product actually is that if, say, for example, there's a damage to the phone, then they are able to repair it, right? So you don't have the hassle of kind of going around to kind of say, okay, how do I get this, etc. So you definitely can speak with them as to how you can get that.
Awesome. Okay, great. Thank you so much for that clarification. You mentioned, have the conversation with the insurance provider, certainly before you buy a vehicle. Do you recommend that we have a conversation with our insurance provider before we buy any major asset, like even a house? So like I want to buy a house, and I know obviously insurance is going to play a part in the whole thing. Do you recommend I have the conversation with you then as well, because of the risk associated with maybe where the house is located, close to the sea or whatever, how that's going to impact my premium? Is that generally what you would recommend people do?
So, I mean, I recommend that you talk to your insurance advisor whenever you're making those large purchases. Especially because if you think about it, so your house, right? A lot of times I know that we know the real estate market, and sometimes it's very difficult to even find the house that you want to buy, right? However, if it is that you are going to have this asset that normally is a couple decades well, you want to ensure that your insurance is as affordable as possible, right? And so it is definitely worthwhile to have that conversation. And you can get possible quotes. It's very easy to call and say, okay, if I'm supposed to get this type of house in this area, what will it be? What will it cost versus that area? And so it's worthwhile to have the conversation. You do definitely see more variations on the motor side though. So the variables on the house tend to be less. And so if somebody decide, boy, I mean, this is the house that is coming up and so I'm going to run with it, then that's fine. What we have to bear in mind, a lot of times people don't factor in the cost of the insurance when you're buying the asset, right? So a lot of times you finish buying the asset and then you say, so how am I going to pay the insurance for this now? And especially on the real estate side, remember that the mortgage company is going to insist that to protect their interest, you must have insurance, right? Which unfortunately is a part of the challenge that we have in Jamaica, where most persons only insure their property because of a mortgage. You don't really have a wide set of the market that says, okay, let us insure a property. So you want to ensure that you're very conscious of all your total cost of ownership. And so that is why it's good to have that conversation with the insurer. Or your broker, whomever your insurance advisor is.
Right, absolutely. Because again, JMB, we're in that business too. And, I think that's some sound advice because, as you rightly say, a lot of people don't factor in the additional costs of insurance and even maintenance costs. I know even with motor vehicles, that tends to happen a lot where, yeah, man, I know how to buy the car. But people don't really stop at, well, okay, how much is it gonna cost me to gas it? And the registration and the fitness and the insurance. And unfortunately, we have a large percentage of people unfortunately on our roads driving who don't have even third party insurance, which is really, really very unfortunate. Let's level set then, Chaluk. Is there any circumstances during which you think honestly insurance isn't necessary? I mean, we've been rattling off a whole list of something. It looked like I can insure everything, including my big toe, which is probably another conversation. But is there any point in time where you say, boy, I really don't need that kind of insurance? I'm probably going overboard and maybe being a little bit of a hypochondriac in insurance terms, and I don't really need it.
So, I mean, I'd rephrase it to say, when is it okay when you're not self-insuring, right? Because essentially, if you're not buying it, there's some insurance somewhere, right? So you're technically self-insuring otherwise. No, I really would say we break it down based on the risk, right? If you believe that risk is not something that is a major risk to me, so the risk is very low, then it may be something where you say, well, it really don't make any sense for me to insure it if the risk is this low. The other component is, so like, for example, let me give you an example. You have persons that have, they have classic cars, right? I mean, they value the car. And to them, the car is $1 million, right? But a valuator is not going to say that it value maybe more than $50,000, right? Now, if it is that you have a setup where your insurance premium and the value of the car is around the same, right? Then maybe you don't want to have comprehensive insurance for that. You just want to have third party because essentially what you want to do is now protect the risk that you have to a third party, because the cost of the insurance is really the equivalent to the cost of the car. Right. Outside of that, if you believe that you have sufficient savings, right? So you may have somebody that may say, look, the amount of savings I have, I am fine not insuring my content because I have sufficient savings to be able to replace whatever without being significantly damaged. Then fine, right? Because ultimately you're taking a conscious decision to say, I'm keeping this risk, because that's what you're saying, You're saying I'm keeping this risk. And so there are definitely situations in which it's fine for you to keep that risk for yourself. Once you're very clear and conscious, that's what you're doing, right? Then that's fine.
Yeah, I think that's a sound point, because as you said, there are certain basic things that we know there's going to be a risk associated with it, especially for things that are outside of our control. And again, to go back to the ever popular example of driving a car on Jamaican road, no matter how safe a driver you think you are, it take one taxi and one motorbike to just totally wipe you out. I mean, it's rough. You're driving for other people on the road that, unfortunately, you may encounter those who are unruly and don't obey the rules, and then you're up a creek. But then there are other situations, as I said, we spoke earlier about entertainment. Was it entertainment insurance? Was it,
Event,
or
right.
events?
Insurance,
If
right.
event insurance. If I don't have no event, then that I don't really need to worry about that. Or I
Right.
really don't have a lot of people visiting my house, if any at all. I'm a bit of a hermit. I don't need to be taking out insurance, that kind of liability insurance, for if people come and broke them toe, or the likelihood of that happening is so small. I don't think it's worth again the money to pay a premium for that. So as you said, it's really about assessing your lifestyle and determining, well, for some people, cell phone insurance is not necessary. Some people them have a little peanut, and if it mash up so big, it's me buy another peanut, and they're good with that.
Right. Right.
Exactly, exactly. So I think that's a very salient point. Um, we're getting some great questions here in the chat. Orville, loving your questions. Thank you so much. Um, in the same way, cars have like third party insurance, Shaluk. Orville's question is, can house and property have third party in that sense, or its own version of third party? So you don't
Um,
really care whether your house burned down, but you care if somebody maybe brought them foot, or your fire mash up somebody else's property, which actually I've heard a story like that.
yeah. So I mean, you generally do not have a third party equivalent on the host side. So unfortunately, you don't have a third party. I mean, if if we believe that that's a need, then that's something that we can look into. But I mean, as it is right now, it's actually the first time I've heard a question like this. So I mean, I'll definitely check and say, is this something for us to look into?
Because it's interesting. I heard of an unfortunate situation where, again, town it's kind of like a townhouse complex where the houses are joined,
Right.
and there was work being done to repair, I think it was the roof of one house, and the
Hmm.
workmen, something went wrong, and
Hmm.
one of their actions started a fire on the house they were working on, and
Hmm.
like you would have said, breeze blow,
Right.
and some of the ash or whatever got to the house next door.
Right.
And the question was, well, if the fire from this house caused the fire next out and really mash up the person house next door,
Hmm.
um, would the insurance, what kind of insurance would that original house where the fire started needed to have had to indemnify their neighbor, if any, or the neighbor get joke if them ever have their own insurance? I mean, how would that work?
This we're now getting into deep insurance now, Kerry.
Sorry. But it's like, these things
Yeah.
happen, or
Yeah.
your pipe burst next door and mash up your neighbor house. You know what I mean? Things seep through the wall and mash up your things. So I guess it kind of brought back to mind for me a kind of a third party type of insurance conversation in the case of property.
Yeah, so generally speaking, right, you if you say, for example, the fire is what you call an insured peril, right? And so if the insured peril from your house damage the adjoining house, right, is an insurance, you say, is proximate cause, right? So it originated in your area, and so as a result, there's a liability on your side. So remember that a big part of insurance is meeting your financial liabilities as well. And so you'd have a liability and something that you have to answer to. However, that generally is not a challenge in our space, primarily because what you have in the majority of the townhouse complex or apartment complexes is that you have a primary insurance that cover the entire building, right? And so essentially you just have one insurance that covers the entire block of building. And so it, even though it may be moving from apartment one to apartment two, for that very reason, that's why we kind of insure the entire block of building. So invariably, most persons living in a townhouse or the strata, they'll know that, boy, you have an insurance amount that you pay on an annual basis, and that is covering the entire building and the common areas, etc. So that invariably will not be a challenge, primarily because of how we structure our programs in Jamaica.
Okay, that sounds very comforting. Thank you for that. Um CJLJ has a question for Chaluk again. Can you explain what the excess or deductible means on your motor insurance. And I think, yeah, that's a great question. Can we say all these terminologies? We're not quite so sure what it means. So break it down for us, Chaluk.
And that's an excellent question, CJ. And there are a lot of times when the excess at the point of a claim becomes a point of great discontent, because a lot of times you buy the insurance and most persons don't read the policy. So I encourage persons to read the policy, right? But every insurance policy has an excess, and on the property side, there's a deductible, right? And this is a portion that the insured, so that's you, have to bear in the event of a loss, right? And so the excess serve two different functions. One is that it also prevents you from having to deal with every little ding, right? So say for example, more often than not, the excess on the motor side is 5% of the sum insured, right? And there invariably is a minimum and a maximum as well. So you also can have your excess capped, right? Which is also something that you need to pay attention to. Ask your insurer, what's my excess? Is it capped? Is it uncapped? And generally speaking, it works in your favor if the excess is capped, right? But essentially what it does is it kind of removes the smaller issues, the smaller claims, and protect you against the larger issues, right? And so essentially the excess is that first portion that you now have responsibility to pay. Or it may be that you may have, say for example, you go to the supermarket and somebody opened their car and scratch a paint on your car, right? You don't. We know it's very annoying, right? But is not the thing that you end up coming to your insurance company for, because invariably that would be within that excess, that 5%, etc. And so it's really to manage those small claims. However, when you have a large enough claim, the excess is still the first portion that you are responsible for, and then the insurance company deals with the remainder.
Okay, and I'm sure that the larger your excess, the lower the premium that you pay, something like that, Goso. I mean,
Well,
because yeah.
So so some companies actually allow you to buy back your excess. In other words, you can actually pay an additional premium to reduce the excess, right? And so some companies allow that, and so that's something that persons could also check out. And as I say, the other component is also exploring and ensuring that you have some sort of cap on your excess. And this is also another area where you want to talk to your insurer or your broker, because the type of car may determine the type of excess as well, right? And so some of those things you may want to bear in mind and ensure that you have the information as well.
What do you mean the type of car determines the excess?
So in the same way that we're talking about the risk factors, right? Say for example that you have a car, and hypothetically speaking, you have a car that is highly stolen. So it's a type of car that is stolen a lot. You may very well right. You may very well end up in a situation where, in addition to your basic excess, you also have a theft excess, right? And so your excess may end up being 10% as against 5%. And so you want to be conscious of some of these things as well as you kind of go about buying insurance.
And buying the car.
And buying the car.
Right. To go back to your point earlier where you said it's great to talk to your insurance provider before you make major asset purchases like buying a car and buying a home, because these are the things. So there are cases where I have no choice what my excess is. So it's not like I can choose from the menu. All right, give me a 5% or give me a 10%. You guys kind of basically said this is the excess that we're giving for this vehicle.
Yeah, so more often than not, it is a part of the risk calculation, and so there's an excess that is tied to the vehicle or to the risk, and so once you buy that policy, then that is the excess that you'd have.
All right, good to know.
Bear in mind that on the property side, you do have that deductible as well, right? And so there's a deductible to bear in mind. Like in the event of a catastrophe, there is a percentage that you also have to bear in mind as well. It's small, generally smaller than the motor, normally in the region of 2%. But it's something to bear in mind.
Give me that again, the difference between the deductible and the excess. Give me that again, I'm sorry.
So deductible and excess is really more that we use deductible on the non-motor side, so property, and on the motor side we use the word excess. Yeah. So it's really the same principle.
Okay, good. So we're learning here tonight, guys. We are learning. We're breaking it down. So great questions, guys. Keep the questions coming. Love it. Just drop it, and we'll ask Shaluk. No, Shaluk. No, you know the big pain point is the claims process. Can I get an amen in the chat? I mean, it's like explain to us how does the claims process work, because I think everybody kind of has hears these horror stories and they're petrified, and you know
Mhm.
I think a lot of it is just really just perhaps a lack of understanding as to how it works sometimes, and it could be a little bit intimidating. But
Mhm.
could you just share with us, just outline how the claims process work? Either that I have my property, something happened, I need to submit a claim for that, or in the case of my motor vehicle, how does that work?
Yeah. So I mean, we're very well aware as insurers that the claims the claims experience, as in when somebody have the need to make a claim, it's normally an emotionally jarring moment. So if it is that you had an accident, that can shake you up, or if it is that your house burned down, that also can shake you up, and so we recognize that persons entering the offices after an incident to submit a claim is already kind of somewhat unsettled, right? And so we try to make the process as smooth as possible. There are a couple of things that persons should be aware of. Firstly, let's start on the motor side. You want to ensure that you have an accident, you report it to the police, right? And legally, you should do that within 24 hours, right? And believe it or not, you can actually get a ticket if you go and report it outside of the 24 hours, right? Or if you don't report it at all. So I encourage you generally to ensure that you go and report it. Now, you want to also notify your insurer as soon as possible. Most insurance policies in Jamaica allow you 30 days to submit your claim. I encourage persons to to notify your insurer as quick as possible, even if you are convinced that you're not going to make a claim, because you do not want to prejudice your position, right? Because remember that in most of these accidents, it's at least two persons. And so you may believe that you have an agreement, right, to fix the person's car claim, fix the person's car, and you don't tell your insurance company. And then 2 months later, your insurance company writing you to say, okay, this person has submitted a claim against you, and now you are now guilty of a no report situation. And so you don't want to have that type of situation, right? And so we say you want to ensure that you notify your insurance company as quickly as possible, even if you do not want to make a claim. If it is that you decide that you want to, say you want to settle it out of pocket, or you want to fix it yourself, right? It's also good to have your insurance claims department in that conversation, because you may very well be agreeing to something that you're not liable for, right? And so one of the things we also encourage persons, and I'd encourage the viewers, I mean, you do not, even if it seems like it's obvious to you that you're liable, do not go out and accept liability at the scene of the accident, right? Let the experts take a look at it and determine where the liability lies, because you may very well be prejudicing your position by going out and say, I know I'm at fault, because maybe you weren't, right? And so you end up kind of put yourself into a bad situation where that is concerned. And so you want to notify your insurer. You then complete a claim form and submit the necessary details. So that would also include your estimate, etc. The insurer will then appoint an assessor, and the assessor essentially will ascertain the cost to repair your vehicle, to also ascertain if there is a claim to also respond to, and also what is the difference between the estimate that you gave as well as the what he's seeing in the market from the repairer, etc. And there may be a need for investigation, and so if there is a need for investigation, and the company will also assign an investigator. We encourage persons also just to cooperate with the investigator. The more you cooperate, the more you make yourself available, the faster the process is, right? Because if an investigator is appointed, then the claim will not move until the investigation report is completed. And so if you're not cooperating with the investigation, then essentially what you're doing is slowing down your own claim. Right. After we've gone through all of that, and there is a establishment that there is definitely a claim, then the insurance company would then provide you with an offer, and then you can then go out and have the discussions. And once you accept, then you move to kind of have the necessary payments. And the property side is pretty similar as well, and so the process is somewhat around the same. So generally speaking, I mean, in a summarized way, as a normal straight cut type of situation, those are the various steps that they would cover.
Okay. Thank you for that. I don't know why I'm hearing an echo of myself. That's strange. But yeah, I mean, at the end of the day, I think that's very useful information to understand the steps. I think that what is also important is, because you mentioned that point about people being reluctant, I guess, to report it to their insurer. They think, okay, I'll just take care of it. And you mentioned, keep your insurance claims department in the loop. I think there's a thinking that, what, I don't want to report it to my insurance company, even though I may report it to the police legit within 24 hours. I don't want to report it to my insurance company because guess what? I think it may impact my no claim discount or something like that. I mean, when does that happen? What stage do you say the impact to your no claim discount occurs?
No, so if you're not making a claim, right? In other words, if the insurance company is not paying out, then your no claim is not being impacted, right?
Okay.
And so I think that's the simplest way to kind of break that down. But I also encourage, there are a number of other things that you can also do to protect your no claim. You can buy accident forgiveness or no claim protection. And so that's an additional, I mean, for a small premium, you're able to protect the no claim that you've amassed over 5 years, etc. And so you don't necessarily have to worry about, if I tell the insurance company, will it affect my no claim? Because if you have accident forgiveness or protected NCD, then you don't have to worry about that. And so that's generally something that you want to bear in mind. And you had mentioned something earlier, Kerry, about uninsured persons on the road. And so that is also something that definitely also affects the claim. Right. So say, for example, you have a hit and run, and when you go and check it out, you realize that, you may have caught the license plate, but when you check it out, this person don't have any insurance at all. What happened to your ability to recover your excess and those things? And that is where you also have uninsured motorist benefit, where you can actually buy insurance to protect you, that if you're hit by somebody that is not insured, and the excess and all of those uninsured expenses, the loss of use, etc., you are able to recover that, right? And so that's definitely something that I'd also encourage persons to explore, because it definitely can help you to protect your interests as well.
Wow, I didn't know that. Insurance for if the other person don't have insurance.
Essentially,
that's interesting. I didn't know that exists. That's good to know. I mean, to go back to the point then about when, so you said the loss of your no claim discount then would only happen in the event that you pay out a claim, not in the event of reporting or reporting. Okay. Because some people feel I would keep it as a state secret, because once the insurance company know, next time I get my premium renewed, that no claim will be gone. You're saying no, it's not in the act of the fact that the accident occurred, is the fact that you're paying out a claim that would cause you to lose that discount.
Right, and it's really paying out a claim under your policy, right? Because equally, say for example, you decide, I'm not at fault, I do not want my insurance company to pay, but I want my insurance company to reach out to the other insurance company and recover my money. So equally, that will not affect your no claim, because you're not making a claim under your policy.
Okay, love that. I love that clarification because, as I said, people hiding from the insurance company because it's like, I don't want to lose my no claim. But yeah, so that's a good clarification. I love this point from Hillary here, Hillary Marsh, sharing her experience that she has benefited from that uninsured driver benefit and said it was a lifesaver and money well spent. Again, it's about the risk. And unfortunately, as I say, you're not just on Jamaican roads, you're not just driving for yourself, you're driving for everybody else. So given depending on how much time you spend on the road. I mean, now that we're in the middle of a pandemic, some of us are still working from home, working remotely, so we're not on the road as much, although you never know. But for a lot of us who spend a lot of time on roads and high traffic areas, it's probably something worthwhile to consider based on the risk that you're exposed to and so on. Good stuff.
Definitely.
So that's the claims process for in the case of motor vehicle. What about things like property and content in the property? I mean, what's that process like, or what's different about that process?
So I mean, it's really along the same line. And say, for example, say it's a all risk. So it says your TV, right? And so it's in your home, it's content, and your TV fell off the stand, and it broke, and so it's an accident, and so you have that situation, right? You do the same thing. You notify insurance company. At this point, you're not required to notify the police, right? So you notify the insurance company. You'd also be required to get an estimate as to either the cost to repair or replace the TV, and then you take that to your claim department, and the claim department will do a review. If there's a need to do any further, loss adjustment or anything like that, given the nature or the size of the claim, then a loss adjuster could be appointed, and then the loss adjuster will also do the same, where they're basically determining if a claim exists and the quantum, the value of the claim, and then that will guide the settlement offer.
Okay. All right. Good stuff. Good stuff. Love it. Love the questions and the engagement in the comment. Orville, you're giving trouble. Yes. Great points. I mean, guys, keep the questions coming. Shaluk, there is this one question that I know was sent to you. No, confession time. I am a GK alum, right? I've worked in the Grace County Group on actually many different occasions in a few subsidiaries. And there was one time in my early career, I did an internship with Allied Insurance Brokers. Great
Oh,
experience. Yeah, man. So when I started at JMMB, recognizing, JMMB has an insurance brokerage, I remember meeting a member of the insurance brokerage team at JMMB. And, they, talking to me, so where are you coming from? And I, sharing with them my experience. And I said, he's like, well, do you know anything about, the insurance brokerage business? Because JMMB is banking and investment, but we have insurance brokerage too. So you say you're doing marketing for the group. So tell us. I said, well, I actually did an extended internship with Allied Insurance Brokers, and they have moved me around to all the departments. I was in claims, I was in marketing, I was in underwriting. So when I told them, yeah, man, I did an extensive internship with Allied Insurance Brokers, they were like, oh, you worked with the university.
yeah, yes,
I mean,
yes.
Allied is like that kind of reputation. But one of the things that I think stuck with me was the most eventful part of the engagement for me when I was working there was my stint in the claims department. And apart from the fact that obviously you say it's a very emotionally charged time, and I totally get that. What was the most impactful part of the experience for me was when people came in to make a claim, how much they did not know
Yeah,
about their policies,
yeah.
and they did not know about the fine print I call it the fine print in the policy, in the sense that not that it's illegible obviously or anything, but as you said, not very many people recognize what the policy is really about, what it covers, what it doesn't cover, and how much it covers, and at the time of the loss versus when you would have initially taken out the policy, etc. And again, it's part of why Goal Get Alive exists, right, guys? We're talking about breaking it all the way down, keeping it all the way real. And I know we had, kind of asked you ahead of time, what I guess are some of those big, most commonly misunderstood or unknown fine print components that you find really surprises your clients very often when they take out insurance and got unfortunately have to make a claim? I mean, what are those areas that you would advise people to really look out for and double down on? You're just keeping it real.
Yeah. So I mean, but Kerry, that I definitely reframe it, right? And so it's not
Of
necessarily
course.
but definitely the things that I believe that persons really need to be aware of. And you're so right. Persons, generally speaking, do not read their insurance policy. And because they don't read their insurance policy, that is when you come to the point of the claim, there's a sense that they're being surprised by some things that they're there. Where everybody and every insurance company has a responsibility to issue the client with the policy once they're taking out the insurance, right? So, what are some of the things that generally create issues at the point of the claim? We shared one earlier, the excess. The excess actually tend to create a challenge, and so it's definitely important that you know what your excess is, know the value of your excess, know if it is capped or not, and know if you have the ability to reduce the excess by getting, like some sort, by buying down your excess, right? So some companies allow for that, and so if that is a possibility, then you definitely want to take that. You also want to be, one of the things that is invariably a challenge. So insurance is really a trust relationship, right? And so it's very important that you disclose to the insurer when you're taking out the business the necessary information, and it's also very important that you disclose to the insurance all the necessary information when you're also completing the claim, right? And so for example, you have a 19-year-old in your house that you intend to drive the car, right? But you go and you buy an insurance policy and you restrict it, right? You restrict it to say only the persons named on the policy should drive, right? And that's normally because you get a discount, you get a restricted driver discount, and so you choose to take that. Now, the challenge that you have now is that if that 19-year-old is driving the car and then is in an accident, the insurance company is going to tell you that it's not covered, right? And so you're literally on your own because the information that you provided when you were taking out the policy, and now, and 9 out of 10 times, this is like on your proposal form. So it's not a conversation. You literally select that you do not want this and you are restricting it, right? And so you want to ensure that you think very carefully around these variables. That am I going to restrict the policy? Do I need to restrict the policy? Is it possible that my brother is going to come from country and need to drive the car, right? If that is the case, I want to ensure that he's able to drive the car, and we do have that type of situation. You also want to ensure, bear in mind that it may be a minor point, but if you have a claim, right, and your premium is not fully paid, then the premium will have to be paid before the claim is settled, right? And I mean that there are many insurance companies that may then very well choose to deduct the premium from the claim. And so so that's something that you're able to work on. You definitely want to learn about whatever add-ons that are there that you're able to get. And we spoke about the uninsured motorists. We spoke about, we also have a lot of companies have the equivalent of a replacement vehicle hire. So, essentially what this does is allow you to have a rental car for a period of time, right? It's normally designed for when the vehicle is being repaired, right? So you have the ability to get the rental car for a period of time, and so you want to ask the insurer, what are some of the add-ons that I need to get to ensure that I have it, and so you also a point as well, I guess, generally, is that persons are not necessarily aware of it. If you take out a new business, right? So this is your first insurance, first year, and you decide to cancel the policy at, let's say, 7 months, chances are you're not going to get back any premium, right? And so you may very well want to bear some of those things in mind. And normally, if it's a renewal and so it's year 2, year 3, then you generally have those things. But 9 out of 10 times, the major issue tend to come back around to the deductible, the excess, and persons feeling like, boy, I never know that this was the excess or this is the amount of the excess. And so, generally speaking, I encourage you to find out what the excess is and to read the policy.
I love those nuggets, and I think definitely those are some of the things that cause people to be caught with their pants down, as you said. They don't factor in that they too will have to find some money to go towards the indemnification, as it were, in terms of replacement and repair. That they have to come up with some money too. Some people think the insurance is going to take care of everything. There are opportunities, as you said, to have add-ons that give you additional protection for certain things because you're not always clear on as to what things are covered. What about in the case of like property too? I mean, is there such a thing where I thought that my home insurance protects me from earthquake, but not Nogoso, and I should have added on the earthquake? You hear these horror stories, usually out of the United States, where if
Yeah.
you live in Florida, don't think that your house insurance going to protect you from hurricane. You need to have special hurricane insurance. I mean, how does it work like in the case of property?
So we generally don't have those challenges in Jamaica. As you say, in the States, you tend to have to insure for flood, different from fire and all of those things. And normally, I believe that in the States, I think the government is responsible for one type of risk, while the property owner is responsible for the other. But in our case, that's not the case. And so your property insurance generally covers all of these things. The only thing I would say is, once again, know what you're buying. In other words, if you buy building insurance, don't expect that it will cover your contents, right? So you want to ensure that you are covering, you're buying for both building and content, so that you're able to get that. So really and truly, that would be more than likely the main point that I'd make on the property side.
Love that, love that. And another thing, I mean, this was one of my experiences again when I was at Allied, is that there was a very sad case of a lady that I knew where she didn't realize when she insured her motor vehicle at the time comprehensively,
Mm-hmm.
she met in an accident. I think it was a write off. Fortunately, she was okay. But
Mm-hmm.
she thought she was going to get back everything that she had insured the vehicle for, not reading the fine print
Mm-hmm.
that she would get back either the sum insured or the value of the vehicle at the time of the loss, whichever was less, was
Yeah.
what her situation was. And she
Yeah.
had no idea. So she
Mm-hmm.
said, but I insured this car for, call it $1 million, whatever it was at the time. You're not
Mm-hmm.
giving me back my $1 million? No, because the car was only valued at 750 at the time of the accident, and we're gonna pay you whichever is less. Either the million 750, 750, that's what you're gonna get. And
Mm-hmm.
she went on inside that place. As you can imagine, it's a very emotionally charged time.
Yeah.
But a lot
Mm-hmm.
of people don't realize that's another, I think, one of the nuances.
Yeah.
Similarly, and probably I'm sure for content as well, no?
So the point to make around that is actually that uh, the fundamental principle of insurance is that we're going to put you back in the position that you were after the loss, the same position that you were right before the loss, right? And so if the vehicle valued 750 right before the loss, even though 2 years ago when you did the valuation it was a million, right before the loss it was 750, and that is the position that the insurance company go and put you back in. All right. And so that tend to be you're right, definitely another challenge that persons have in the claims department. How and their big debate, like how do I kind of justify the fact that it went down by 200,000 or 300,000? And this is where the assessors come in. So we actually depend on external experts to kind of do an assessment and say, okay, what is the value for this car in this condition at this point in time? And so they will do an assessment. And so that is another reason why we also encourage persons to do valuation reports, right? You do your valuation report. Most companies kind of said do it every other year. If you want to ensure that you're safe, we're not going to stop you from doing it every year. There's absolutely nothing wrong with doing it every year, right? And that way you are ensuring that your value is always accurate, right? And so you do not have these type of conversations, right? The issue tend to be when you kind of allow, because motor vehicle naturally depreciate over time, right? And so you allow the vehicle to depreciate and you don't have an accurate value of the vehicle. And so invariably that creates a problem.
I love that, and actually, you're right. When you talk about every year, because actually, that was my one of my learnings when I left Allied, when I started early in my career and started to drive. Once I started to get my own vehicle and stuff, every year I was up in that valuation parking lot. I mean, doing my valuation because of that woman's experience. And I remember people like, "Why are you going every year? You don't need to go." I was like, "You stay there." I am not insured for nothing. Where as close as possible to what I'm gonna get back at the end of the day. I That's what I want, and so that's actually how I've been doing it for the most part. Great stuff. Thanks so much, Shaluk. We're gonna wrap up. We have a few final questions here. Just wrapping up. Shanique been in the comments. Shanique has a great question here. Should I get insurance? It's probably similar to what we're touching on earlier. She wants to know if she should get insurance in a gated community for a house in a gated community, or is it standard that they should have that covered as part of the maintenance costs? I mean,
So generally speaking, they should. So Shani could want to engage with her strata office just to confirm that the insurance is in place, and that the insurance is adequate, right? But outside of that, she could very well decide to insure her content, because once again, they're going to insure the building. Right? Whatever is inside is your responsibility. And so you definitely can get insurance for that.
wonderful. Thanks for that question, Shanique. And it kind of ties into a question from Nigel. Hey, Nigel, where Nigel was asking, can you get insurance for an apartment that's in a gated community as part of the strata, meaning without all of the other property owners going along with you as an individual? So, by right, Nigel shouldn't, if his strata is doing it, I mean, do you allow or do you insure for apartments if the strata, because some of these stratas, Lord have mercy, I mean, they're in a mess. And
Yeah.
you say you don't trust what your strata do, there's no evidence that they're taking out insurance, so you want to just insure your little apartment. Do you facilitate that? Are
So
you
you actually do have some insurers that actually facilitate that. It definitely comes down to the design of the strata and the design of the apartment complex generally. But it is not impossible. It's a conversation that you definitely want to have with the insurer, especially if it's a situation where the strata has no insurance, right? And so you want to protect your interest.
Absolutely. So the point is, if you're in a strata, do your homework, see what's there now. And if what is there is not covering you, or there's any concern at all, you mentioned, the opportunity to do either content coverage or have a conversation with your insurance provider or your broker. That's definitely one to have. Well, Shaluk, let me tell you, this conversation I think has been so rich. I tell you, this insurance conversation can go on and on. I mean, tonight we covered general, guys, and we're gonna have to come back in a future episode at some point to cover. We want to cover health, we want to cover life, because there are so many questions. But just some quick homework. First of all, can we give Shaluk a virtual JMMB Goal Getter Live round of applause in the comments? Love it. You know how we like to do it. We like to show our wonderful guests who, even though they're on a curfew and have nowhere going, they still take the time to join us and give us all of their wonderful, rich expertise. And Shaluk, as the general manager of GK Insurance Company, I still call on a JIC, I'm guilty, right? Because again, I'm a GK alum. So I was at GK Group back in the day when y'all were still JIC. So I still call you JIC, but it's GK Insurance, right? General insurance providers. Shaluk is their general manager, leading the wonderful team there. JMB Insurance Brokers, of course, we've been around for quite some time, and GKI is one of our valued partners who we broker products for. So even if you don't want to reach out to GKI directly, then JMB IB is here in all JMB branch locations where you can have that conversation. And guys, of course, we've been streaming this live, but we have been recording. So if you join us a little bit late and you want to catch the replay, you can go back to our YouTube channel, JMB Group Jamaica. If you're not subscribed to our YouTube channel, please hit that subscribe button, hit the notification bell, so every time we go live or we drop a new video, because we have all sorts of videos on that channel, guys, lots of information, all of our previous Goal Getter lives on all kinds of topics that benefit you and your family. and your life and your finances. You can watch it at your leisure on demand whenever you need to. Share the information. Please click like on this video, because of course it helps to keep our channel boosted and nice and prominent, so more and more people can get access to this great information. And we will be back next week Tuesday live again 8 p.m. You know how we do it. We don't like to bust the topic in advance. Why? Because we want you to follow us on social media. Follow JMB Group Jamaica on Instagram. We're on Facebook. We're on Twitter. We are also on LinkedIn. And if you follow us, you'll see when we post our notifications or promo e-flyers about what next week's topic is gonna be. And I'm telling you, people, it's gonna be spicy. I can't give you no more than that, but it's gonna be very spicy. So you don't want to miss that one. And Chaluk, thank you so much for your time. It's really been awesome. And we wish you and your team at GKI all the best. Sending love and greetings from the JMMB family and the JMMB IB family in particular to your GKI and GK family. And again, thank you for the partnership. And we look forward to continuing to work with you guys. Thanks to our awesome audience for watching and for engaging and asking questions and dropping some great nuggets in the comments. Let's keep the conversation going. And of course, guys, remember, as we like to say, COVID not done. So keep safe, wash your hands, wear your mask, keep your distance until we get this COVID thing properly behind us in the meantime. So thanks, guys. Stay safe, walk good. Good night. Take care. Bye.